Welcome to the V2U Research Ultimate Masterclass. Today, we are doing a 7-minute deep dive into the mechanics of the ASX200's record-breaking session. Strap in. On Thursday, February 19th, 2026, the S&P ASX200 didn't just rise, it conquered. Closing at 9,086.2, we saw a massive 79.2-point jump, nearly a 1% gain. The real story was the intraday high of 9,118.80. This represents a significant psychological breakthrough for the Australian share market. 9,000 is no longer just a dream. At V2U Research, we use our proprietary insight engine to track institutional flow and global macro shifts. We want to know the why behind the what. The week's trend was driven by a constructive mix of global macro stability and a strong domestic reporting season. We are seeing a fundamental shift in capital deployment. Technically, the floor is set. We are holding comfortably above the 8,672.8 to 8,708.8 support zone. This is where the big buyers are stepping in to defend the trend. However, near-term resistance in the 9,083 to 9,115 range is the next hurdle. We are seeing some institutional consolidation here as the market catches its breath. The momentum is clearly building. Price action suggests that buying interest is outweighing sell-side pressure, even at these historic record levels. It's a risk-on environment. Underpinning this is the Australian labour market. With unemployment holding steady at 4.1%, the domestic economy is showing the resilience needed to support higher valuations. The earnings season is the engine of this rally. Companies that hit their numbers are being rewarded handsomely, while misses are being dealt with aggressively. Zip Co Limited was the session's biggest casualty, sliding 34%. Their half-year earnings missed the mark, and the market didn't hesitate to punish the stock. A classic institutional reset. Wesfarmers also retreated 5.6%. Investors are questioning if a $1.6 billion profit is sustainable when cost of living pressures are squeezing their core retail customers. Medibank Private saw a 5.6% drop. An 11% decline in net profit reflects the tightening margins and rising claims in the private health space. Telstra, however, was a standout. A 3.6% gain, powered by a 9.4% profit rise in mobile, proves that essential services remain the portfolio's anchor. Brambles reaffirmed their strength with a 3.7% advance. Their 14% profit jump is a masterclass in managing global supply chain logistics in a volatile world. Energy stocks were the day's champions. Woodside and Santos led the pack, rising 4.4% and 5.5% respectively as geopolitical tensions in the Middle East drove oil higher. The telecommunications sector added 2.25%. We are seeing a clear rotation from risky growth into defensive high-yield sectors like energy and telecoms. Seeking alpha. Look at Hub24. Their 14% explosion shows that growth is still alive in wealth management for those who know where to look. Sonic Healthcare added nearly 10%. High-volume sessions like these are exactly what the V2U Insight engine is designed to capitalize on. Volume precedes price. Global attention now shifts to the US. Jobless claims and crude oil inventories will be the primary catalysts for the next leg of the global risk-on trade. Crude inventories will provide critical insight into global energy demand and the potential for further sector rallies in Woodside and Santos. Back home, CPI is the heartbeat monitor. It dictates the RBA's interest rate trajectory. Watch these figures, they are the key to the next 6 months. Construction work done figures will also provide insight into Australia's infrastructure health. This is the foundation of our national growth story. In this wealth war, systems always beat symptoms. Automate your savings, avoid the credit card interest trap, and track your net worth religiously. This is the V2U way. Remember the mango tree strategy: build assets today that feed your family for generations. Investing is not a sprint, it's about building a digital locker of wealth. Manage your risk, understand your charts, and trade responsibly. Never chase the FOMO. Let the data guide your decisions, not your emotions. The ASX200 is entering a new era. With the right systems and insights from V2U research, you can navigate this volatility and build real wealth. If you found this masterclass helpful, like, subscribe, and turn on notifications. Share your watch list below. We are tracking these stocks together. Thank you for watching the V2U Research Masterclass. Trade responsibly, manage your risk, and we'll see you in the next market update. Stay tuned for our upcoming deep dive on the US Federal Reserve's next move. Your wealth journey continues here. See you soon.
Disclaimer: the information contained in this publication is general in nature and has been prepared without taking into account your objectives, financial situation, or needs. It is provided by Titan Security, holder of Australian Financial Services, license number 307040. It is not intended to constitute personal financial advice. Investing and trading involve risk, and past performance is not a reliable indicator of future performance. You should consider your own objectives, financial situation, and needs before acting on any information contained herein. You should also read our financial services guide and, where relevant, the product disclosure statement and target market determination issued by the product provider. These documents are available upon request. Titan Securities accepts no liability for any loss or damage arising from reliance on this information.